Well, good afternoon and welcome to the Market Carver. I'm Joe Clark, Managing Partner of the Financial Enhancement Group, bringing you this week's update on some of the things that we see going on through the lens of the way we manage money. Our process, the four-legged stool, looks at four individual components: the technical things that are going on inside of the market, the fundamentals that are going on with markets and companies, the big boats, the institutions, what it is that they're trying to get done or doing, and then last but not least, the narrative or the macroeconomics. A very interesting week with Bernanke talking again, saying, hey, the economy is growing, but not enough that we need to make any changes. Big movements in whipsaws, if you will, in some of the marketplaces. So here we go. Let's go to that first. The first leg we're going to talk about today is the technical leg. And this is a chart of Facebook stock. Remember, in charting and technical stuff, you really aren't looking at the fundamentals at all, the name of the company, what they do. All you're doing is looking at money flow. And what happened with Facebook is the stock had been working in that downwards channel. You can see the red line known as resistance, the top of the red line known as support. And you can watch the chart work its way up and down and kind of wiggle through, but staying in that thing, in the channel. The key thing is that it was making lower highs and lower lows. That's not a good trend. And all of a sudden, the earnings came out, the fundamentals looked better, and the stock surged 30% in one day, technically saying, hey, this is a good thing to look at. Now, that didn't mean we ran out and bought it. In fact, we didn't. But I did want to bring this to your attention, just to understand how the technical side works. The reason we follow the big boats, this next chart, is because there's some really interesting things that are going on right now in the marketplace. And that's that retail investors are continuing to pile into equity funds. In fact, we had the largest outflow coming out of bond funds in June that we've seen. This is the largest inflow, or the largest outflow of equities by the large traders, commercial accounts, institutional clients is how Bank of America Merrill Lynch defines it. And it's the largest they've seen of money exiting equities going back until 2008. Very, very concerning to be watching the little guys put more money in, the big guys pull money out. It usually doesn't work out well in the long run. So we've got a very close eye, I guess you should say, on what's going on inside of the marketplace. From an economic standpoint, the PMI numbers came out, the manufacturing survey, good stuff. Not as good as it once was, slowed down from the beginning of the year, but the trajectory is still right, still growth. The economy is clearly growing. You have to remember as an investor, though, what you're really looking for is the trajectory of the direction. How much is the trajectory of improvement or decline? Because ultimately, that's where a stock market and where earnings will show up or erode. Don't forget, if you've got a kid in school, or high school or college where there's expenses, and you're eligible to contribute to a 529, you should consider it. You can put up to $5,000 a year in, and you get a $1,000 tax credit back. That's a $1,000 coupon coming off what you owe the state in taxes. That is a beautiful thing, and for a lot of people, makes a lot of sense. Happy to help talk you through that if you'd like to know more. Certainly something that we do at the Clark household. If you're out and about Saturday morning, don't forget to catch the radio show 9 to 10 on WQME. Sunday mornings 10 to 11 on Shine 99. And you can always get our newspaper column or other radio links on our website at yourlifeafterwork.com. If there's anything we can do to be of service, please don't hesitate to let us know. God bless. Have a great week. We'll see you again soon.